The U.S. action in Venezuela has renewed the focus on that country's oil sector, which includes some of the richest crude reserves in the world. Venezuela's oil production, however, has fallen sharply in recent decades due to declining investment and the impact of U.S. sanctions. Joining me now to break down what this all means for the global oil market and prices at the pumps is Gerson Gibbs, the senior managing partner at Bellet Capital. Gerson, thank you so much for being here today.
Thanks for having me.
First, where has oil been trading since the U.S. ousted Nicolas Maduro, and where do you expect prices to go in the short term?
Well, it hasn't traded much higher. We were at about 56 bucks per barrel, and it increased by $1 or $2. But I didn't expect many changes because, again, as you initially mentioned, Venezuela wasn't producing as much oil in the last couple of years, so they weren't going to impact. But ultimately, they can produce if the right amount of money is invested in them.
Are you concerned that getting to that country's oil and processing it for market will be a problem?
It's definitely going to be a problem. They don't have the factories updated to actually have that oil turned into the adequate oil that's needed for the United States. So that's a major issue. It's going to have to be a lot of money invested into that country in order to get the oil to where we need it to be.
Right, let's talk about that investment. Do you think major oil companies will actually get on board with putting up that money to fix Venezuela's oil infrastructure? Because we did hear from oil executives this week at the White House, one of them saying that it's uninvestable.
It's currently uninvestable because of the political tension that they're having in the country right now. There are conversations between Venezuela and the United States. There are some negotiations going on, and I think there's a little bit of traction, but I think we're at the very beginning of that negotiation. But currently, they're uninvestable just because of the political tension. All this is fairly early, and we have to wait to see. Maduro was arraigned this week, and he won't be expected in court until March. So there's going to be a little bit of time till this country becomes investable.
How does this play out moving forward? Obviously, there's still a lot to figure out. What do you think this looks like in the coming weeks and months, years? And also, do you see any roadblocks?
I think there's currently a little bit of roadblocks because they still have loyalty to Maduro. There's going to be a lot of conversations regarding who's going to control the oil. I think this is just the very beginning. In the long haul, I think that the United States and Venezuela will work out some type of agreement that will ultimately benefit us, but we're just at the beginning of those discussions.
Right, right. Let's go ahead and bring it back home to how this could possibly impact Americans. When it comes to gas prices, can we expect to see a drop in prices once this oil starts to get produced?
There'll definitely be a drop in prices, but I don't see that happening for at least 5 to 10 years because it's going to take billions just to reconstruct those factories in order to have the oil that we can actually utilize. So definitely in the future, but not in the near future. I believe nothing's going to happen, probably not in this administration, outside of the negotiations to what the future is going to look like.
And it's very unknown at this time. All right, Gerson Gibbs with Bellet Capital, thank you so much for your perspective today.
Thank you.